The deadline to opt out of the employee payroll tax is getting closer. You're going to need to have your own plan in place before November 1st if you want to opt out. But what kind of plan is right for you? And what about any pre-existing conditions? David Donhoff with Leverage Planners has the answers.
So there's two different ways to get out, two different kinds of long-term care policies you can get. You can get the traditional type of long-term care policy, which is a use it or lose it premium. It's just like every other insurance policy you're aware of. You pay in advance, and if you get sick or need it, then it's there for you. But if you stay healthy, good job, but you don't get a refund of your money. Right. And then there's asset-based long-term care, which is a kind of depository account at an insurance company. No cost, charges, penalties, or fees. And sometimes they'll actually pay an interest rate on your savings deposits and give you a tripler benefit of your deposit as a long-term care policy. So both kinds can get you out of the long-term care payroll tax. The traditional kind is best for folks that are younger and healthier. We always say it depends on your age, your health, and your gender, right? So the more female you are, the better rates you get. You're lucky. So, I'll point out, some people will say, but what can I actually budget and count on? So I'll tell you, for example, we had a client with an adult son, 25 years old, super healthy. He qualified for a policy, $425,000 a year. Awesome. He's got to keep a policy in place at least 2 years to get opted out. So he's going to be out of pocket $700-800. That's great. The day after his policy was approved and put in force, that company tripled the minimum. So had he not applied and gotten it in force that day, it would have been $1,200 instead of $400. So again, the importance of choosing a lifeboat quickly, worrying about adjusting for a voyage later on.
Okay, so no procrastination when it comes to this right now. Is it possible, though? Is there any way to get out of this tax for free?
Yeah, so there's programs called asset-based long-term care, which has absolutely no cost, charges, or fees. You need to make a deposit of funds. Now, a lot of people protect themselves, they're good adults, by having safety net money at the bank. Well, the bank's paying what, 0.1, 0.2% right now. So you can make a deposit in some asset-based accounts that will actually pay 2% positive interest rate. Now, I know that's not sexy, but 2% is 10 times better than the bank. Yeah. And that covers the long-term care exemption, the payroll tax exemption. And down the road, you don't like it, don't want it, you can back out, get your money out, relatively easy, no cost, no charges or penalties, and you made the interest along the way.
So, okay, if I'm married, I have a partner, can you do it together and pay less? Or is that like a better deal?
Right. In some cases, people are familiar with, a lot of times you can clump your insurance policies together at a good broker. You get his and hers car, sometimes a whole family of car insurance, you can get a discount. It can happen. It can be done with long-term care as well for both husband and wife and partnership or husband, et cetera. You can get couples policies where you're both covered, you both get exempted out, and they're fairly well priced. Yes.
Something that a lot of people worry about with all insurance. What if I have a pre-existing health condition?
Right. So there are policies that are available. Now, you can't be on death's door and get a long-term care policy. However, there are policies that are available for very substandard health. So it's not a foregone conclusion. If you've been denied for life insurance or health insurance before, it does not mean that you can't qualify for a very bare bones minimal policy that will at least get you out of the state tax system. So there are possibilities. One size does not fit all, and there's no guarantees until the medical interview gets done. But in many cases, it's possible where it wasn't assumed to be before.
What does it take to apply to a long-term care policy? Is it like getting life insurance?
Somewhat similar, probably less intrusive. It's generally speaking, you have to go through yes and no questions, about 20 yes and no questions. They call them knockout questions. Do you walk with a cane? Are you currently smoking pot? Different stuff like that. And a yes question on any of those doesn't mean you're going to be denied. It just means the companies are looking at that to custom fit what fits for you. By the way, we've got a way that you can get all this information in for pre-screening for free at stopthetaxbleed.com. So this is before the insurance companies know your name or anything about you personally. We will pre-screen to make sure that when you put the information ultimately in, you don't get canceled or denied, and that eliminates your ability to get it from anybody else. So we'll run the first blush screen to make sure that you fit in the best, whichever way you go.
Thanks to David for spelling this out for us. He and his team at Leverage Planners are ready to help answer your questions. Call the phone number on your screen or visit the link on New Day's website. We are just days away from the Olympics, and next we've got some advice from a gold medalist about getting good rest.
This portion of New Day Northwest is sponsored by Leverage Planners.